Good morning, everyone. I hope people are logging into the webinar fine. I see the number of participants is going up. We had over 300 registrations. I will wait an extra minute to ensure people can come in. All right, numbers are going up. Let me welcome everyone, and those that come in late, you will have a chance to be welcomed by some of the other speakers later on. So welcome everyone to this webinar jointly hosted by the World Green Building Council and the Climate Bonds Initiative. Today's topic is taxonomies and green buildings, and how far have we come on the development of taxonomies, green building criteria in the taxonomies, and how is the impact on green finance for green buildings and in the market uptake generally across a few regions. So I'm Julie Emmerich. I'm the Sustainable Finance Lead at the World Green Building Council. I've been hosting for the last 1.5 years a lot of discussions as part of our working groups on finance and the taxonomies, how to develop the criteria, how to work with them, a lot of the challenges also in the interpretation, for example, of the criteria, and how to report towards the taxonomies, how the impact it's having. And I'm really happy to today be hosting this webinar with a few different voices. And I hope not everyone always agrees because it's a challenging topic. So I hope to bring some of these discussions out to the wider public today through this webinar. So to start, let me quickly tell you that we will have Christina Gamboa and Sean Kidney, who are respectively the CEOs of the World Green Building Council and the Climate Bonds Initiative, to come in and have a quick chat. Then we will move on with 3 presentations. I will introduce the speakers later on, and then we will hopefully have enough time towards the end to really engage the audience, all of you participants today. And you can use the Q&A function on the Zoom settings that you should be seeing in front of you. So please do share your questions, and we will be addressing them towards the end of the webinar. So with that, I would invite Christina and Sean to come in. Great.
Excellent. Okay, thank you, Julie. And welcome everyone to this webinar today. So as you've heard, today's webinar discusses the status quo of green taxonomies and how they are tackling green buildings and building up momentum for the sustainable transformation worldwide. So I'm very happy to welcome Sean, the CEO of Climate Bonds Initiatives. And Sean, welcome. Can you please tell us what taxonomies are and their links to the green bond market?
Well, we have a challenge, as you know, in addressing climate change. Like, the figure offside of the building sector is 38% of emissions reductions we have to achieve between now and 2050 are going to come from the built environment. But you ask an investor to tell you, well, what qualifies, what buildings are important, which aren't, and it's a mess. Now, there's been work done in the last 20 or 30 years around what green labelling schemes. This is what the World Green Building Council is fundamentally about, representing associations in those areas. But it's still complex, and a lot of it is built environment. And what we need for investors, for financiers who are moving in this particular area, is clarity about rule sets. And we started this market many years ago. The green bond market in particular has grown 100-fold in the last 10 years. It's now about $3 trillion outstanding. We started this market by providing clear rules about what qualifies from development banks originally, and then from organisations like ourselves, the Green Bond Principles. And that's actually fueled the growth. Simplicity in financial markets is everything. You need a tag, basically, on a Bluebird terminal. And we've managed to convert that discussion into regulatory discussions around guidance as well. But at the end of the day, this is something very simple. It's just a shopping list for the future, is a term I use. And having a clear sense of what the shopping list is makes a hell of a lot of difference if you're sending your partner to the supermarket to buy stuff for your meal. They're not going to make mistakes and so on. And that's really what's needed here to grow this market. But I want to stress that we have investor appetite. When we've seen green bond issuance around the world globally for the building sector, there's about $700 billion of green property bonds now, label bonds. We see extra appetite compared to ordinary bonds. That is oversubscription rates. We see price benefit. We see investors saying they want to green their portfolios, tell me how to do it easily and quickly. They can't deal with complexity. So that's the win we've had so far. We now just need to make it easy for everyone to tell what's around in their portfolio that qualifies and so on and so on. This is for large investors, for pension funds and insurance funds who do worry about climate change, who are looking at the 2050 figure and saying, what do I do? What do I do?
Totally. Yeah, so there's appetite, there's need also for a better language and clarity for what qualifies as green in this space. And it's excellent, all this work that has been up to date. And now we're now at a moment, Sean, where we're seeing national and regional taxonomies coming up in different geographies, which is also great, but also brings, of course, more conversations, more leadership that is needed. I would like to also ask you if you could share with us how criteria and standards and taxonomies are being developed, and how do you see this evolving going forward in terms of this asks that we're hearing for enhancing harmonization?
Well, the first thing to say is that we've managed to establish some clear principles going forward when it comes to simplicity. And I stress that folks like the World Green Building Council and some of the green building councils, like in Australia, that are members, have been involved in our working groups for a long time, as well as people like the International Energy Agency. We managed to establish a clear couple of sets of rules. One is a best-in-class approach, which is performance-focused. You will know more than anyone, Christina, about the extent to which the emissions performance of a building, which is the primary metric we're worried about when it comes to climate issues, is related to the performance of the building itself rather than the design and architecture of it. I think it's somewhere between 25 and 40% of the emissions performance of the building is related to how it's used. So we've looked at metrics which try and assess how the performance works going forward. That's one win. We've managed to get that used commonly across governments around the world. So the first metric is essentially a best-in-class metric around performance. The second metric is an improvement metric. Those two metrics, which are simple in concept, now suffuse all the taxonomies of the world. There's the regulatory taxonomy from Singapore to Colombia to Mexico to the European Union. And now there are variations in detail. I mean, the European Union has a bunch of other do no significant harm measures that it asks issuers to look at, which is sensible, albeit sometimes difficult to assess. We're working on trying to make that simpler. The moment I'm a member of the European Union Platform on Sustainable Finance. But nevertheless, there's actually quite a common approach globally. This also applies by the other sectors like energy or transport, relatively simple and similar approaches globally. So that's what we've done so far. And now what we've also been doing is working with some green building councils around the world, and of course the WGBC, about how we link that to existing schemes, that are historical schemes for the voluntary sector, that have really pioneered the way here. And that's, I think we're going to see a lot of interesting announcements about that this year, Christina. Isn't that right?
Yes, that is right. And I really appreciate how you explained it. It's around performance and improvement in those metrics, right? So that's also a message I want for our audience to take away. And I guess also the other one is this collaboration, because as we've built this capacity from different angles, now we have to let go of let's say our own logos in a way, and greeds and stuff like that, and try to find way forward where we can all prosper with all the knowledge we have in a way that we can bring scale. Because as you always very eloquently say, the biggest opportunity here is to mobilize the resources that are going into the sector in a massive way to improve for the better and help the people that want to invest responsibly. I guess, Sean, that takes me to another kind of mindset also on the prospects, right? I already kind of answered it, I think, the question I wanted to say. Sorry, but I think, again, the prospects of taxonomies and green bonds. What insights do you think in the next 2 years, as we are committed to this collaboration, what do you think the prospect is that we can achieve? Also knowing that we're off track in terms of decarbonizing the built environment.
Well, we're off track on decarbonising the whole planet. So
yeah, that's right.
You know, it's we've got a long way to go. The IPCC says we've got to reduce emissions 65% by 2035 to have a chance of a sustainable future for our kids. So we've got a hell of a lot to do, especially in the built environment. The built environment has been slow. You know, it's slow in terms of what we do. We've made some progress, but we needed to retrofit 50% of the housing stock of the world by now. We're in the single digits, really. Buildings need to be very efficient going forward. Regulation is changing slowly but surely in Europe of NZEB, et cetera, but it's painful. So clearly we've got to speed all this up. I want to stress we've had a couple of wins. You know, we do now have a very clear understanding amongst investors the future will be green. This is post-Biden climate summit, post-IRA in the US, GX plan in Japan, InvestEU in Europe, and so on. There's no doubt about that. Their question really is, how do we tell who's going to be a winner and a loser? And how do we make it work for us financially, so on. So that's a good thing. We've also had a win in the thematic market, which is only a slice of the market, but we do have $700 billion of green property bonds globally, which is not a bad start, but it needs to be $7 trillion US quickly. So while we've grown 100-fold in the last 10 years, that's great. You know, we've only got to go 10-fold now between now and 2030. It's still a tall order. Clarity of rules is becoming the norm. And in this partnership with the World Green Building Council, we're looking at how we can support and talk to other organizations doing this, the GRESBs of the world and the CREMs of the world. These are all part of the conversation. Totally. So we can provide simplicity for investors, simplicity for governments around what qualifies, and continue to improve. You know, embodied carbon's a classic one. We clearly need to address it, but there's a lack of data points, so it's a work in progress. Watch this space. Evolving standards will be the story. That's the key point. And then we need incentives. Well, we're getting incentives, and this will be the really exciting story for those of us concerned about this issue. Governments are beginning to roll out different kinds of incentives, sometimes negative incentives, as the Netherlands Central Bank, which has banned loans to energy inefficient buildings by banks, to positive incentives, which is the Hungarian Central Bank's risk weighting differential and capital ratio requirements to the banks if they lend to green property bonds. And that boosted green property bond issuance. These things are starting to become the norm around the world, and you'll see a lot more of it. If you put those two things together, and you put a lasting together, you know, we already know post-COVID, tenancy rates in green buildings are higher than tenancy rates in buildings that aren't green. This is the case in New York and London and Paris already. This is going to be accentuated by the push by investors, the push by governments to ensure that their buildings are green, et cetera, et cetera. Quality tenants are gravitating to green. So you put all these things together, I think we can make this work. But, you know, financial markets need clarity, simplicity, and standards. That's what we've got to sort out. That's what we are going to sort out this year, Christina, isn't it?
Totally. Yes, it is. So in that spirit, I'm very happy to announce today that World GBC and Climate Bonds Initiative have a knowledge partnership through World GBC Sustainable Finance Task Force. So we are totally in belief that this partnership will further advance our organizations to enhance that criteria development, useful verification and certification of green investments, and more generally, sustainable finance practices in the construction and real estate sectors. It is happening, and together we're going to accelerate change. Thank you, Sean, for joining us today, and now handing it over back again to Julie.
Thank you, Christina. Thank you, Sean. I think it's been very inspiring to hear your perspectives. So let's move on to our three excellent speakers we have today rallied up. We will start first about hearing a bit more about the criteria development or taxonomy development from Matteo Bigoni, who is the head of taxonomies at the Climate Bonds Initiative. So please go ahead.
Thank you, Julie, and good morning, everybody. My name is Matteo. I'm head of taxonomies at the Climate Bonds Initiative, and thank you very much for having me today. Hopefully, I'll manage to unpick what Sean mentioned about buildings and taxonomies a little bit more with the discussion. So next slide, please. I wanted to sort of talk about what taxonomies really are from a technical perspective. And as you could see here in this slide, taxonomies really have different components, mostly three main parts, which are the substantial contribution or technical screening criteria, the do no significant harm component, and finally the social safeguards component. Now, this structure has been historically spearheaded by the EU taxonomy in the sense that the structure of these three components has been then adopted and replicated by many other taxonomies around the world. And so these parts, these three components, are the guiding principles of the taxonomy, and they really provide an assessment around the environmental performance of the assets, or of the activity rather, and that's what Sean was mentioning. So how we can assess and gauge the environmental performance of an activity, its underlying project and assets. These three components are one part of the picture, and the other part is what we call an external rule set. So all those accompanying sets of regulations and laws that really come with the taxonomy, but they're not strictly part of the taxonomy text itself. These are reporting requirements, disclosure standards. It could be the examples is the EU Green Bond Standards. That is not part of the taxonomy itself, but it accompanies the taxonomy in order to provide verification and audit services against the taxonomy. So what I'm going to focus on in the next slide, please, is really unpicking what it means about meeting the environmental performance of the technical screening criteria, and specifically the nature of the technical screening criteria. We've seen a convergence of what thresholds and criteria needs to be in taxonomies. And again, this has been something that the EU taxonomy has been critical in establishing in the narrative of taxonomies around the world. So as much as possible, technical screening criteria need to be science-based, meaning that they need to have scientific rigor, they need to be based on evidence, and they need to be applicable at the local level. At the same time, the criteria need to be interoperable, and this sort of buzzword of interoperability means how taxonomies globally can actually speak to each other. We're not sort of saying that taxonomies need to be quite the same all the time, and that the technical screening criteria need to be identical. What we're saying here that there needs to be certain critical points of overlap and commonalities that allow investors and international capital flows to sort of move around seamlessly. And so criteria, as much as possible, should be binary and based on numeric thresholds. This is because it provides really with the investor or the user of the taxonomy with a binary choice that makes it really simple to verify against. It needs to be clear, the language needs to be unambiguous, and it needs to provide very clear clarity of what you're looking for. So an example of this threshold is this tailpipe emissions of 50 grams of CO2 per kilometer that the EU taxonomy had in its first iteration. And so this is a very numeric threshold. It provides a binary choice. It's simple to understand and to use. Secondly, as I mentioned, the criteria need to be science-based as much as possible, needs to sort of apply scientific information, evidence-based data that inform the structure and content of the technical screening criteria. So we're looking at sort of international scenarios provided by, such as the International Energy Agency, that can provide sectoral approaches that can be applicable for all taxonomies, and then sort of tailored at the country or jurisdiction level with local data. So it's a sort of like this tension between having international standards that are applicable at the local level. And finally, taxonomies and their standards, their criteria need to be revised periodically, in the sense that the market evolves, the understanding of investors evolves, and the understanding of climates evolves, and the climate itself actually evolves, or rather climate change is evolving. And so that needs to be included in the development of the taxonomy to reflect technological advances, but also our understanding of climate science. And so this concept of interoperability needs to be moderated with the need to apply taxonomies at the domestic or local level. Next slide, please. And so, as I mentioned, the EU taxonomy really has become the benchmark internationally for taxonomies, in the sense that it's the most extensive taxonomy. It provides the more level of detail out there. And so for buildings specifically, this is relevant because it's really codified the different sort of activities involved in the building sector for taxonomies. As you can see here, there are 4 main categories of activities for buildings. One is the construction of new buildings, which include obviously building new builds, both in terms of residentials and non-residentials. You have renovation of existing buildings, essentially retrofitting. And so this refers to the relatively improvement performance that Sean was mentioning earlier on. So how an existing building can actually move along a pathway towards decarbonization. It's not quite there yet. It won't be net zero, but it's moving towards net zero, or is moving towards substantially reducing greenhouse gas emissions. And so this is why the EU taxonomy mentions it, refers to it as transitional. And I put here an example of a metric that the EU taxonomy uses. So the relatively performance improvement is quantified as a 30% reduction in primary energy demand. And so this means that in terms of interoperability, this is not relatively speaking, it's not interoperable because primary energy demand itself is very much used in the EU taxonomy. But that 30% relative improvement can be the interoperability piece that can be extracted by other taxonomies and embedded in their own technical screening criteria. So there's different levels of interoperability and different layers of interoperability, and this is a very clear example of it. Then we have the third category, which is the energy efficiency equipment, so components. As you all know, buildings can be retrofitted in toto, or we can look at specific components such as the envelope or windows that can be replaced and worked on separately. And so the EU taxonomy wants to reward the improvement over the efficiency of the equipment. And finally is acquisition of ownership and ownership of buildings, which looks at providing criteria for instance, the buying and selling of buildings. Next slide, please. And so based on these criteria, really, the EU taxonomy has provided the sort of the mold, the blueprint for the development of taxonomies around the world and the structure of taxonomies around the world. And buildings is a really exciting sector in the sense that it provides lots of opportunities and challenges at the same time. The challenges, as I mentioned, is that it's by nature, by default, buildings have this tension between sort of wanting to apply international standards, but also the need to look at the local context. So criteria needs to be highly contextualized for buildings. Buildings depend on their energy consumption, so the operational emissions, specifically the use of electricity and gas from the grids. And as you all know, grids are highly diversified in the sense that the grid in Europe is not the same as the grid in Australia, which means that other things being equal, the same building with the same environmental features or characteristics will not have the same environmental performance in Australia versus Europe because of differences in climatic conditions and differences in the grids. So buildings encapsulates this sort of like challenge that we have for interoperability. Then we have the lack of universally applicable proxies at the international level. And then that criteria for buildings obviously needs to reflect the different needs of a spectrum of taxonomy users. But there's tons of opportunities. So buildings is essentially a key sector for taxonomies and for decarbonization of the economy. It represents a huge slice of emissions worldwide. We see the convergence of criteria globally in terms of universal metric to be used and the sectoral approach, as I said, the different classification systems used by the EU taxonomy. And finally, buildings is essentially a very common asset that financial institutions and banks, who are one of the main users of taxonomies around the world, they have lots of buildings in their portfolios or loans for green buildings and green dwellings. So it's a key sector for decarbonization and hence a key sector for taxonomies. Over to you, Julie. Thank you.
Great, thank you so much, Matteo. And actually, there is a question that I would like to directly address to you because it's directly linked to your slides. We have a question asking if economic activity complies with the technical screening criteria that you were alluding to, but does not comply with the do no significant harm criteria or the minimum social safeguards, is it EU taxonomy compliant or maybe more generally taxonomy compliant?
So you need to be the three in order to be compliant with the taxonomy. So that would be if you are aligned with the technical screening criteria, then you are essentially eligible under the EU taxonomy. But you need to, in order for have this concept of being compliant, need to be aligned with. We need to meet the performance and requirements of the three. Yeah. One thing that I wanted to highlight is that very quickly, the minimum social safeguards, or rather the social safeguards, are not applied at the activity level, but rather at the entity level. So there's a big difference between the social safeguards and the other two components.
Yeah, that's an excellent point you're making. Thank you so much for this deep, or well, could be a deep dive, but I'm sure you could also host a whole webinar just on the topic of explaining the taxonomy. But let's move on to Benjamin Towell, who's here today to represent the Singapore Green Building Council. And Ben has some more expertise on the Singapore taxonomy. So let's hear from him.
Hello. All right. I think you can go straight into the first image if possible. Right. So the Wild West of sustainable finance and directing capital to meaningful projects that would move the needle, as has been described earlier, on actually making some progress to avoiding the climate crisis which we're hurtling towards. So before it was a lawless place, rife with complexity of what counts, what's green, what's not, extensive second-party opinions, which sometimes had a point, sometimes didn't, and it was generally murky for investors and owners alike. Next one. Next slide. See, you'll see the metaphors coming out now. So then came the line, or multiple lines in the sand, of having a guiding set of principles and standards of what could be considered green to give that market confidence and to help direct capital. So nothing you haven't heard on this call already. And the EU taxonomy in many ways was that first real line in the sand at such a level with its technical screening criteria. Of course, there were bonds guidance and there were other standards of, which talk about the principles, but it was the first one which one could argue is a fantastic starting point, and it had ambitious coverage of issues and industries. Next slide. And I'm being a bit unfair here by calling it a dinosaur. It's probably not a dinosaur. If you look at the stages of evolution, it's not looking like it will go extinct. So in a rush for slides, I was probably being a bit unfair. But from an Asian perspective, the EU taxonomy was a good start, but it still was a slightly missed opportunity in many ways. For example, there are a range of complex metrics for the built environment, which can be great for accountants, but is it really good for industry? Is 30% in for certain asset classes a really meaningful energy saving, or is it not? There's also a big lack of recognition of rating tools. Now, rating tools actually help provide that independent third-party technical screening run by built environment professionals. Now, of course, some don't have metrics such as actual energy performance. It could be a points-based mechanism on it, but I don't think that is a problem. I think these are things which can evolve to then coalesce nicely with taxonomies, so that there are, just like climate bonds actually have, for example, for LEED, it's not just LEED, there are also energy savings requirements there as well. So it does kind of bridge that gap to points and outcomes that are thereafter. If we go on to the next one. Then we have the evolution, the Singapore Asia taxonomy. So in my mind, this is a next big stepping stone on where taxonomies should be heading for, especially in developing as well as developed markets. It's very easy to direct capital to green activities. All banks will want to do it, but they're already there. What we really want to do is drive that transition across everyone. You're not going to solve the climate crisis unless everyone transitions. And one of the great things about the Singapore Asia taxonomy is it has this amber criteria across many industries. And these are activities which will have significant impact to reduce, for example, the greenhouse gas emissions of a particular project or entity or activity, okay? Again, the SG taxonomy, great evolution, and it starts to recognize rating tools up front very clearly. So you know that if you have a green mark asset and it's certified in Singapore using the latest criteria, fantastic, because it's very focused on energy efficiency as well as other metrics. There's key outcomes in it. It's recognized. However, this is the Singapore Asia taxonomy, and there are many things lacking in terms of where many of our Asian companies are operating in, including Australia. So there is again room for evolution and room for World GBC members and their rating tools to really kind of understand what are the outcomes of taxonomies and how do they demonstrate that alignment. And so more and more of them can help demystify the complexities of taxonomies even further by having rating tools which are robust and drive that action. And whether they're counted as a green activity or an amber activity, I think that's fine. Okay, moving on. Next slide. So I think, as mentioned, there is a pressure for harmonization of standards. And this is one thing that I think we need to take a little step back and really think on. Understanding of context is critical. There are interoperabilities around taxonomies, and I think that's fine. And again, what investors look for. If I have a portfolio which covers the UK, Australia, parts of Asia, I want to be able to know, how is my portfolio doing? Am I able to transition this to green? Is it actually having a material impact? And how can I work that out? And that's where context comes in, but also there does need to be a harmonization of metrics and approaches which allow you to do that. An example, that 30% using primary energy demand is a very different proposition than 30% at a whole building, which is very different as a proposition of 30% when you're looking at, for example, hotels which can use vacant room nights or occupied room nights. So there are these kind of requirements to actually bring back in a level of complexity to taxonomies to allow for a fair harmonization and move away from an oversimplification of complex, which can lead to untoward outcomes and actually lead to greater confusion and even more complexity as we move forward. So taxonomies, they are evolving, and I'm looking forward to seeing what the Australian taxonomy holds, as that's going to be the next big one that comes out, and building on many of the things that we've discussed with the Singapore Asia taxonomy. So all in all, it's a good start. They are evolving, but of course, as with anything, the devil's in the detail and how we move those forward together, not attacking them, working with them, and then improving on them so that we all benefit.
Thank you so much, Ben, for coming with the experience at the Singapore GBC. Sorry, the Singapore Taxonomy, I meant to say, but also, of course, your experience from the Singapore Green Building Council. Great. So we can come back to you later in the Q&A session. I'm happy to pass on now to the floor to Anna Åkesson, who's the Group Environmental Manager at Skanska. And also to mention that Skanska is our very valued partner as part of World GBC's Sustainable Finance Task Force and a founding member. And thank you for all your support in bringing back the voice of the industry and putting a lot of challenges on the table for us to address. The floor is yours.
Thank you so much, Julie, and thank you for the invitation and all the hard work that is going on in your working group and that you produce. So my name is, you can change the slide, please. My name is Anna Åkesson. I work as the Group Environmental Manager in Skanska. We're a development and construction company that operates in the Nordics, Central Europe, and some of the US, parts of the US. And here at the below or the lower parts of this slide, you can see some of the projects that we've been working on. And I wanted to give you some feedback or parts of what we have learned while working with the taxonomy. And I can tell you that a couple of years ago, or rather many years ago, we started to hear and learn about something that the EU Commission were doing as part of their Green Deal, and it was going to call the taxonomy, and it was going to change the world. And having worked in this industry for quite some time, a lot of us just reluctantly said that it's going to take time. We have time, and this is going to take time. And we know that the construction industry is like a really huge boat. It takes time to steer it around. Shame on us, I should say, because this has gone much, much quicker than anyone anticipated. And it's not only been a happy dance, if you could say so, but there has been some really important changes and learnings from this that I wanted to share with you today. So please, can we take the next slide? We often hear about the hardships of implementing new frameworks or topics or taxonomies, and I think what we've seen here with the EU taxonomy and other taxonomies being developed out of that or learning from that, I think is brilliant. It's exactly what we need to do. Our biggest learning, I would say, is that the EU taxonomy as such has put the topic on the table, the sustainability topic on the table in a way that we never anticipated possible. It's something that when investors and clients are starting to request detailed knowledge around the criteria that we heard of earlier, if we are fulfilling the criteria or not, if we are working with the criteria, how we are implementing it in our processes in the business, it creates a discussion, a framework for discussion within and outside of the borders of the company that is really, really important for us in making change, in driving our industry to a more sustainable perspective and more sustainable solutions. For us, we've seen how, as a sustainability team, working quite lonely for a long time, being those idealists and people thinking us not really being part of the business of that kind now has changed in very much. We see how the sustainability discussions now are definitely part of the business discussions. Saying that we can fulfill these criteria definitely creates a business opportunity for us. It creates an opportunity to talk within the company also, for example, much closely collaborations with the design team, the supply chain team, the people working with the procurement within our company has had a raise in interest in these subjects and topics in a way that we never thought would be possible. And of course, the close collaboration with the financial team is really, really interesting and good. And talking about creating business opportunity, that is where the magic happens, I would say. The second topic here is the holistic approach. And I would say that for a very long time, and when we saw some of the certifications with earlier on the slides, LEED, BREEAM, null CO2, zero CO2, and we have lots and lots of different certification schemes in our different markets. What the taxonomy does is that it's not just to be very, very good at one thing. We need to take the holistic approach and make sure that we are also doing good in all of the sustainability parts, all of the green sustainability parts, and now also the social safeguards, the minimum social safeguards, which creates an opportunity to actually be really good. We have been, well, the construction industry might not be the greenest industry, but this is the opportunity for us to really make a change. And I would say that when we are discussing criteria on biodiversity, the taxonomy, EU taxonomy has created, again, a topic discussion that has never existed earlier in the same way with clients and investors. It drives change in a very, very good way. And last but not least, I would like to point out the opportunity in the collaborations that this has created. So one of the areas where we're definitely collaborating is, as Julie said earlier, in the working group that she is leading, where we are discussing how to interpret the criteria in the best way over borders and within borders, national borders and industry borders. If you've looked into the EU taxonomy, you know there are lots and lots of criteria that are really detailed, and it's a good thing, but it also creates the opportunity to actually discuss how to interpret this and the difference in interpretation between different countries. So what we see is that national green building councils are definitely in the different markets having industry discussions that are really beneficial for us, where we not just have peers trying to gain winnings over each other, but actually together create an opportunity to make a change in our markets. But we also see, and this has been touched upon before, how different national legislation and policies can create different opportunities in how to fulfill the criteria and meet the criteria. And this is also where it's really important that we have a discussion on how to interpret and how to make sure that we continue to move the industry and the change and keeping it going forward. So I would say that it's, as I started off, it's not easy, but working with the EU taxonomy has definitely improved the way we're working with sustainability within all parts of our company, and we've just started. This is something that has created speed and change, and we see now that when the projects out in our business is asking for support in how to meet and fulfill and work with the taxonomy criteria, we are definitely on the right path. And I would say that for those of us who thought about a lot of years ago that this would never be very quick, we just have to sit back and realize that money talks, and this is definitely creating change in a very positive way. Thank you.
Thank you so much, Anna, for sharing your perspective. I'm happy to move on to the questions and answers. Also a reminder to the audience that you can drop in your questions directly in the tool, and I see some people have been doing that. So yes, Ben and Matteo, if you can come back live, and I think we can skip the slides for the remaining time. So there is one question that I personally really like, and I will pick it up. It's from Will Wild. About the role of international cooperation in helping to accelerate taxonomy, and I will say taxonomy development maybe, but also in the implementation and uptake of the taxonomy. So since it was coming to your last point, Anna, I will direct it to you first, and then happy to open the floor to Ben or Matteo.
Please, can you, I can't find the question. Can you just repeat it for me, Julie?
Oh, it's about the role of international cooperation
Yeah.
in development and implementation of taxonomies.
So I think this has created, the EU taxonomy being quite hard to interpret, and sometimes it's created the opportunity to actually discuss the interpretation of the criteria and the thresholds or the parts where you actually need to make a decision on how to interpret. It's very different in our different markets. I can say when it comes to energy and energy legislation, and so when we look at the Nordics, we have a very different way of interpreting it, dependent on, for example, Central Europe. And let's not just talk about the US then. So this is where we have peers and other people from other industries also involved in the discussion on how to make sure that we evolve and look into the criteria in a fair way. And I think that discussion drives change in a much, much quicker way than we've seen before. We do not always agree, which I think is a good thing, but it definitely makes us understand better how that we can collaborate and make sure that change actually happens.
Great. And on that question, I would also like to point out for maybe those that missed it at the beginning that Sean and Christina, the respective CEOs of Climate Bonds Initiative and the World Green Building Council, also announced a knowledge partnership between our two organizations, specifically on the topic of taxonomies. And Ben, I see you're nodding. Do you want to come in on the same question?
I mean, I can. I think let's just be very overt. The world is It is very global. Finance flows, investments are global in nature. It's very difficult to find even an SME that really only operates or is impacted by its own local context. So whilst there does need to be clear local, regional context taken into consideration, there is an international conversation to be had. But that international conversation tends to be dominated by the European voices and the call for harmonization to the EU taxonomy, which isn't necessarily, as I showed, the right taxonomy to use per se, but it was a good Kickstarter. So the EU taxonomy, for its faults, was, as I highlighted, a great starting point. And the evolution of taxonomies on that with a view to interoperability, which I think was what Matteo highlighted, is a critical component. And at the end of the day, international corporates getting international finance banked by international banks, they all need something to help with that consistency and with that view to, are they actually doing something which is aligned to engineering realities and climate science? And so that's the role in many ways of the taxonomy, to kind of govern that Wild West and to help those conversations take place and not in echo chambers.
Great, thank you. Yeah, and Matteo, if you want to come in, and maybe also if in your answer you can provide some examples of, kind of good examples that you've come across when working with different taxonomies.
Sure. I mean, I think there are three main points that I wanted to actually mention in terms of harmonization, in terms of actually international collaboration. One has to mention the International Platform for Sustainable Finance, which is basically representatives of all different taxonomies and governments around the world that come together and discuss how to best collaborate on taxonomies, being spearheaded by the European Commission, and it's open to all countries that want to participate. So that offers definitely a platform for dialogue and collaboration. There are other efforts. The Common Ground Taxonomy, which was a synthesis of a comparison exercise between the EU taxonomy and the Chinese taxonomy. So the two major blocks that have adopted taxonomies, and it will be open to further expansion since the other countries and jurisdictions will be added to the comparison exercise. And then thirdly, the UK taxonomy has actually provided a set of recommendations on how to streamline the EU taxonomy in terms of things like the do no significant harm that can be then adopted by other jurisdictions and countries. That can be a useful guide to apply different taxonomies in different parts of the world. So how to embed sort of preserve this kind of level of interoperability but make it domestic. So those are the three sort of initiatives that I think are particularly worth mentioning when we talk about international collaboration. And there are others. And so hopefully there will be more scope for collaboration in taxonomies going forward.
Great, thank you so much in coming in from your perspective. I also note that we've had a couple of questions regarding to the water conservation environmental objective. does anyone want to elaborate on Matteo? Maybe you can go first.
Yeah, sure. I mean, there's a whole environmental objective that covers water in taxonomies, so it doesn't have to be mutually exclusive with carbon or greenhouse gas emissions, really. I mean, water is definitely one of the key aspects. And in fact, I mean, if you look at the do no significant harm criteria, the part about the do no significant harm is the fact that whilst reducing greenhouse gas emissions, so looking at climate change mitigation, you should not cause harm on other environmental objectives such as water resources, water conservation. So if I reduce my greenhouse gas emissions of the building by 30%, I need to make sure that I'm not actually increasing water consumption, for instance. So all these objectives, I know that from this kind of like perspective, like we're talking about climate change, it can be quite siloed. But in fact, the do no significant harm part wants to make sure that there's no sort of harm on other environmental objectives. And as you develop taxonomies, other environmental objectives are added to the set of criteria, and water is definitely one of the key ones.
Yeah, thanks for sharing. Yeah, and I was going to come to Anna as well.
I just wanted to say also, this is part of the holistic perspective I was talking about, that water is definitely one of the important parts to take care of when we talk about sustainability. And just as Matteo said, we can't just be very good at one part and then ignore the other ones. And the water is one of those where we have both very technical detailed specifications in the EU taxonomy on water, on how much water we can use, but it also contains how to make sure that we protect the water resources we have today already. So I think water is definitely being taken care of. They can all be sharpened, and they will in time, but we have a good start as we have.
So maybe before I move on to a different topic, I also noticed there were a few questions, and I addressed this to you earlier, Matteo, but maybe I can pick up on it again, because we now talked about the environmental objectives and that they're holistic, but there is also a couple of questions regarding the social safeguards. Can you maybe expand on this a bit?
Sorry, is that for me?
Yeah, I would say you can start.
Okay, so I'll define what the social safeguards mean. Is that there's and it's sort of it looks at providing a minimal set of criteria around things like labor laws, anti-bribery legislation, anti-bribery standards, anti-slavery standards. So making sure that the entity applying or using the taxonomy is not engaging in harmful practices such as slavery, right? So it's good that if you're basically in practice, if you're building a highly efficient, low carbon buildings, but then you employed underage labor in building that building, then obviously it's part of that holistic approach that actually Anna was talking about just now, right? We want to make sure that there's a minimum set of standards that can be met from a social perspective. Whilst not being a social taxonomy, we do want to consider some minimum social safeguards in it. That's what it means.
Great, thank you. I think that answers it pretty well. So if I move on, Ben, you were touching upon earlier in your presentation, you called it the Wild West before any taxonomies came in. There is a question regarding the kind of value of these new taxonomies coming in place when there is a lot of voluntary schemes already in the market, and you were touching upon this a bit earlier. So if you can expand.
Yeah, so I like the question. What's the added value of a taxonomy? So I think there is two answers to this. One, the value add to investors and financial institutions and those seeking green investments is purely consistency. So you don't go to one bank and they say, yeah, we'll accept LEED basic as green, and then you go to another bank and they say, no, we only accept platinum, or BREEAM, or sorry, we don't accept BREEAM, we only accept EDGE, or we only accept Green Star. So this way you're able to kind of bring these pockets of people together so they can at least talk the same language, and that interoperability of, yeah, we recognize this for these assets in these parts of the world, well done you. However, I do agree, the green criteria to me is, and especially in my part of the world, is not where the action is at, because most of those people with or without a taxonomy would be in the green criteria anyway. They would always be getting the green mark platinums or the super low energy certificates. That's not going to change. You're not directing anything more to them. You're just feeling good about your loan book. What I appreciate and what I think is critical is the amber category, the transition category. It has hard deadlines to it, so there's hard stops, either 2030 or 2035, depending on industry in the Singapore Asia taxonomy. But this to me is where you get the real value add. How do we make sure we direct, and it may start, of course, it starts as voluntary, but how do we really make sure that all the loan books that are in the red move into the amber? How can we help them? And that's where you're directing capital to make a difference. Just directing at already green projects, it's a feel-good thing. And if people feel good and want to do more green projects, then you're moving the needle a little bit. But to really move the needle for real action, it's about transition. It's moving everyone. And that's where I think taxonomies have a really big role to play, and I'm hoping that the EU taxonomy gets on board in doing that in the future, because it's a real opportunity.
Yeah, I would second this. If Matteo, Anna, if you want to come in, otherwise I'm on this question. I'm happy to move on. Otherwise, there has also been a question regarding, that there are some taxonomies are now in place in some countries, but in some others, there are no taxonomies yet, or they're currently being developed. And there is a case where sometimes the national and sectoral targets that relate to the technical screening criteria can be difficult to meet when there are no national thresholds. So maybe I direct this first to Anna, and I will rephrase a bit the question. Because from your experience, Skanska is, of course, active internationally. And you mentioned earlier that there are differences from one country to the other. So maybe you can first touch upon this point, how to deal with let's say the EU taxonomy, we know at least is a framework. I would assume the Asia green taxonomy to be similar. How do you then comply, at the project level that is in its national context? And a second part of the question would be, how about in some countries when there is very little information or kind of laws to comply with to show taxonomy alignment?
Yeah, I think it's a really interesting question, and I would start with the second part, because yes, in some of our European markets where we are working, and also other markets, there are some of these thresholds or criteria that there are no national legislation or policy around. So that's where we try to use our company and the group, Skanska Group, as a tool to show what can be done, what have we done in other similar markets, what kind of policies and legislation do exist that could be maybe not copied, but applied in its own way into that market. And I think that's where the good things happen, where we have markets where we have not developed yet a focus in that kind of specific area, where we can put the focus on that and help drive change and lead and show that it is possible. Then different countries have very different strategic views of how to work with this, but that's where we should try to show the good examples and lead the way, show that it's possible.
Thank you so much. I think that's a very helpful insight. So we've come at the end of the hour, and I feel like we could be spending the whole day talking about this and probably the whole week, but let's be reasonable and cut it short here right now. And again, on the topic of collaboration, I think a lot of like everyone on the panel today, is willing to have more discussions and really push the agenda forward. So I will also remind everyone that we have been recording this webinar, and we're happy to make it available afterwards for the many registered participants that could make it live today, and we can also share the slides afterwards. So thank you everyone. Thank you to all the panelists today, or the speakers, and thank you for the audience for having taken the 1 hour out of your day to join us today.